Okay, I started my timer 30 seconds late. So, good morning. We're going to get started. Okay, so do we have any questions before we get started, either online or in person? I kind of walked around and got some of the people that were here earlier. Happy to answer any questions. Okay. Online, I'll handle online. Okay, just as a reminder, if you were not here on Monday, you need to view Monday's. A lot of information. We did not just go over the syllabus. There was a lot of information about the class that if you missed, you might be a little lost about the format of the class. Now, all the classes are recorded. They're on Blackboard, and I've got a slide coming up about that. So, okay, just as a reminder, if you're online, you can chat with Brian to ask any questions. Occasionally, I'll touch base with him about any questions I need to answer from the chat room. He can answer a lot of them right off the bat. Yeah. Okay, and then as a reminder, if you're answering questions, if you're here above the chat window, you can answer. And remember, if you're on a computer, those panels are detachable and they float around, so they might not look exactly like this. If you're on a device, you're going to, they're going to be along the bottom typically. And when I ask the questions, it's a way to promote engagement and interaction. You're not being great, so that's not, so you don't have to have a worry about being wrong or anything. It's just good, and it's good for me to know how many people are answering what. And we've got a couple real questions coming before we get there. Let's ask this question just to get warmed up. This is, are there any assignments due in my accounting lab this Saturday? Type the tiny.cc/. If you're in class, typing in the chat window the link tiny.cc/ACCT23020. Can you enlarge that chat for anyone? Okay. Okay, so, okay, you want to display this one? Okay, yes, absolutely. So everyone got that. This Saturday, there are assignments due. And at the end of class, I have a slide about what's due. But basically, this Saturday, you have a course intro quiz. When I looked at it yesterday morning, I think 68 people had completed it, and the average on it was 99.8. You know, so it's pretty short, pretty easy. You get 2 attempts in case you mess up something. Questions will be slightly different each attempt. So you have a course intro that's really easy. It's over Monday and the syllabus combined. You have an attendance quiz, because every week in class there's an attendance quiz over things we do in class, and that doesn't take too long. That shows up, that becomes today, Wednesdays around 5 p.m. because we can't have an attendance quiz if we haven't had class yet. So I make those up after class. So, and then the Chapter 1 homework is also due Saturday. This is the easiest stuff you will do all semester, so this is not the week to miss doing your stuff. Now, you are going to have to register for My Accounting Lab and get going. The vast majority of students do not have trouble with this. Once in a while, someone just goes to the link and tries to wing it, I've put instructions on Blackboard, the very front page. It's one of the top couple items there on how to register for My Accounting Lab. Again, there's 17 days free temporary access, so there's no reason to wait to say, well, I don't know now, you can get it. You do not want to miss this first week because these are easy assignments for you to help build up your grade. Not going to take you very long. That said, keep in mind that if you wait until, say, 6 p.m. Saturday or 8 p.m. Saturday, and you run into any kind of glitch, there's no guarantees you can get help. End up being the one that you drop. And that's just sad because you want to be able to drop other things, not this first week easy stuff. So, so make sure you register for My Accounting Lab. If you can do it today, that's even better. As of this, when I clicked on it, I think we had about 295 students register for My Accounting Lab, which is really great. We're not quite at the halfway mark, but we're getting there. So, so I would just advise you get registered for My Accounting Lab. Make sure you can get on it, that you have an account, because it is frustrating to Saturday night waiting till 11 p.m. to do it. There aren't, I mean, I try to respond to emails, but again, I'm not sure it's available Saturday night to answer emails. Okay, so so do know that. Just a reminder, especially for people who were not here Monday, if to view a class, a recorded class, this is your backup option, or what you want to have. Perhaps when you're doing the attendance quiz, you can look things up. You can view them and collaborate in Blackboard. Using Collaborate on your computer is probably gives you the best viewing experience because it's indexed. You can index by slide. You can go exactly where you want. You're not just not dragging a search bar blindly to guess where you want to go, but it's indexed and it's prettier. It's a better experience, but that's Collaborate on your computer. There is no way to view recorded Collaborate sessions on a mobile app. So to get that each day, sometime within a couple hours after the end of class, hopefully within a couple hours, but for sure within 24 hours, I upload those recordings of class to YouTube. So you can also, those on the home page of Blackboard, there's a link to an Excel sheet that has I updated after each class day with the link to the YouTube recording. So if you just don't want to wrestle with Collaborate or you don't have a computer available, you've got that available for you too. So again, if you missed Monday, view that recording, and that is up on Blackboard, so you have that available. Okay, and also if you want to just go to the Excel that contains all the recordings, it's at tiny.cc/YouTube link. So that'll take you straight. So each class period, I'll update the links there. Okay, the video lectures, we have a video quiz due Sunday night. To get to the video lectures, just as a reminder, to get to the video lectures, you go over on the left side and it'll say Unit 1, 2, 3. We are in Unit 1 right now. That's the chapter first exam. So if you click there, that will get you to the video lectures. And then once you click there, you go down to the bottom of the screen. Okay, and they'll also the different, and those are fairly short, but those are all way there, and that's what the video quiz is over. So that's Sunday. You can do it early. Those are available. Yes. Yes, all those videos. Now those can be very short. I've broken them up by learning objectives, and then if they do get longer, that's when I break them up into pieces. Okay. I could make one really long one, and then it would just be harder to find what you needed. Okay. Okay, so what we're going to start class with, I've got a couple questions to start with, and this is just to start our conversation about accounting. So now we're getting off of technology into accounting about what this class is about. So, true-false question or yes-no question. So, first one, bookkeeping is the mechanical part of accounting. So, have to decide if we want to do, if we think that's true or false. Okay, go ahead and publish it. I just turned my mic off. I'm back on now. Good. Okay. So bookkeeping is the mechanical part. A lot of times people think bookkeeping is what this class is about. Bookkeeping is not what this class is about. When you take accounting in high school, typically a lot of that is bookkeeping. Bookkeeping is the process of we take this transaction and we record it. We want to make sure that we write the check correctly and we enter it correctly in the books. Now that's all very important. We have to have transactions. We cannot have accounting without transactions. But bookkeeping is typically in your high school accounting class, we're going to cover that stuff in the first couple of weeks. But accounting is much more than just the bookkeeping. So we have to cover transactions so we can understand where this information comes from. But bookkeeping is typically is the mechanical part of accounting. Okay, now this one, we haven't talked about this all, but let's take a stab at it. Two types of accounting. There's two major types of accounting. Are they A, nonprofit, B, financial and managerial, C, internal and external, or D, decision making? So let's make a choice. Okay. Go ahead and switch to the next slide and publish the poll. Yeah. Okay. So mostly right. Okay. So let's talk about this. This class is financial accounting. The next class that you take after this one is managerial accounting. And let's talk about the difference between the two. Financial accounting is our system of keeping score of business able to report to outsiders how they did. It's our way, it's our language of business, they call it, but financial accounting primarily exists so that we can keep track of how we did and communicate that information with external users. So financial accounting, the point, what we're trying to get with financial is we're trying to come up with financial statements, which are kind of like scorecards. How'd we do? How does our income look? How much in assets do we have? How much do we owe? So financial accounting, we're very much on how do we do and how do we look to external users. Now, external users want to know how we did because they're going to be about whether to loan us money. They're going to be making decisions about whether to purchase our stock. They're going to make decisions about how to work for us. Regulators make decisions about how, if we're complying with regulations, goes towards calculating our taxes. So a lot of external users use that financial accounting information. Now, for this system to work, everyone has to do it the same. If we have a banker making a decision about whether to make a loan, that banker needs to know that those financial statements are prepared using a common set of rules. Similarly, if I go to invest in stock and I want to look at how a company's done, I can't say, well, let's look at how they make rules for how they've done it, and let me compare that. So if I'm trying to decide if I want to buy Amazon stock or Target stock, I want to know that those two companies are using the same rules to report. Also, very important to me is I want to know that the statements that I'm looking at are actually based in reality, that they have a grounding in what really happened. And that brings up another subset of accounting, is companies issue their financial statements, and we pick them up and we say, well, look how much income they had, or how little income, or whatever. How do we know that's right? Well, we know that's right because publicly held companies are required to have audits, and these are independent firm comes in, an accounting firm comes in, an audit firm. They look at everything. They do tests of transactions, and they look at source documents, and they talk to outsiders, and they come up with a reasonable assurance that those financial statements really happened. Otherwise, we would just be relying on companies to say, take our word for it, it's right. Well, these experts perform a huge public service that we can rely on that. So financial accounting is very much about, here's all the bookkeeping that was done, is it right? And then did we do the right with those things? Did we analyze those transactions correctly? Are they where they need to be? Did we follow the rules? Are we all following the same set of rules? So that's financial accounting. So in it, we are focused on those rules. We want to be able to understand when we have a financial statement, what are we looking at? We want to understand as managers what's happening in our company when we take a certain action. What kind of impact is that? So financial accounting is very, very much rooted in this system of rules. Now, there's two sets of rules we currently have. We have U.S. GAAP, U.S. Generally Accepted Accounting Principles, and that's been in play for many, many, many years, many decades. This is U.S. companies use these Generally Accepted Accounting Principles. It's always just referred to as GAAP. They use GAAP to prepare their financial statements. So that tells us if we buy a building, for example, we don't just put on expenses here, but it gets it in the life of the building. Yeah. 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 Generally Accepted Accounting Principles. And you're going to see all this in the video lecture. Again, remember, I'm just trying to catch us up to speed in terms of getting us to where we can answer some and do some homework. So we have U.S. GAAP, which says here's what U.S. companies have to, here's the rules. Well, in the last 20 or 30 years, it's become an increasingly global economy, and now we have what's known as IFRS, International Financial Reporting, IFRS. And again, in those video lectures, you're going to see this. I'll talk about it more. But international financial reporting standards are just a set of rules that companies in many countries have adopted it, so they are all following the same set of rules. So we have U.S. GAAP, and we have IFRS, International Financial Reporting Standards, in some areas. So companies that have operations in the U.S. and in other countries are left with, which one do we follow? Well, they have to use IFRS in the other countries that have adopted us. So we'll talk more about this U.S. GAAP or IFRS, but those are the two major systems that when we do financial statements, we have to follow these rules. So this class is fairly rigid in that there's not a lot of room for creativity, okay? If you use creativity, you generally get in trouble in accounting. So this class is very much about the rules. And a lot of people that'll appeal to, there's this set of rules. When you get into upper level classes, you'll realize that accounting isn't as black and white. Like right now, when we look at it, this is all going to be rules, and it's going to be right or wrong, and this is what you do. Like when I decided to major in accounting, it was my in my financial accounting course, I decided to major in it. I loved it because there was a right or wrong answer. Because personally, I'm not so much about those warm, fuzzy fields where it's, well, I'll do it that way. It's just not me. I like the comfort of knowing I'm right. You know, I want to be able to balance. You know, I add this up and I add this up and they match. Do you not like that? You like being in, yeah, I mean, this is what I like about accounting. Now, what I like about accounting, then some other people don't like that so much because they're more into the warm, fuzzy interpretations. And I'm not being sarcastic here. It's all kinds of people. And so thank goodness there are people that like those other things that are more great. But anyway, so in our class, very much rules, very much rigid application because we all have to keep score the same way because the whole system will fail if we're not doing it the same way. So this class will be appealing to some people because of that, and to other people it'll feel real frustrating because there's all these rules and these exceptions and things like that. And as I said, when I was attracted to accounting, I loved it because I knew I had the right answer. It's almost like doing a math problem and you know you're right because it works out. But it's not math. Basic class, you need arithmetic, so adding, subtracting, multiplying, and dividing a little bit. But adding and subtracting are the big ones. And you need some basic algebra, so knowing how to solve y equals a plus b, you know, so being able to solve for the unknown. That's the extent of the math we do in this class. So if you have math anxiety, it's basically arithmetic, okay? So I love that. But then what I found is as I went, like when you get to be a junior accounting major, then all of a sudden, whoa, there's a lot of gray areas in accounting. There's a lot of ways to interpret things. So it isn't as cut and dried as I originally thought, but in this class it is. Very much, here's how you do it. So there's a lot of rules. So then the other type of, so this is financial accounting geared to outside users, also very, very much focused on external users and the past. How do we do? Okay, so this is the result of all these transactions. Then on the other hand, we have managerial accounting is designed for the managers inside the company. What information do they need to manage business better? And it's a very different focus. It's a very much of a focus on the individual parts of a company. Financial accounting is focused on the whole company. We read a report, and we're pretty much reading the report for the whole company as a whole, not each individual store the company might have. Managerial accounting, on the other hand, is about the pieces of the company. Okay, financial accounting. If we were reporting questions? Okay. If we were reporting grades in here on a financial accounting basis, and we had the first exam, financial accounting, I would publish the average of the first exam. And that would be the external report for this class. Okay. But you as individual students, that doesn't help you very much. You can look at the average and know that the class did that, but you're saying, how'd I do? Did I get it right? Do I need to do something different? I need some feedback. I need some feedback. And that's what managerial accounting is about. Managerial accounting, that would be giving each person their own score on their exam. So that's what we're doing in managerial accounting, is we're gearing it for the individual manager, the individual user, to say, what kind of information do you need to make better decisions? Now, over time in managerial accounting, we have developed tools to help us manage better, and those are what we cover in managerial accounting. Managerial accounting, a lot of it is based on intuition, or it just makes sense. It's like, oh yeah, that makes sense. I know that if I'm selling bikes for $500 and they cost me $300, I'm making $200 on each bike, and if I have $1,000 of rent, I have to sell 5 bikes to break even, right? So it's that kind of intuition, and you look at it and you go, oh, that makes sense. And that's because managerial accounting is based on the internal users. It doesn't have to follow this rigid set of rules so that everyone does it the same way. So managerial, different look at accounting. So managerial accounting is very much based on internal users looking toward the future, supporting decision making. So yeah, the past is back, but we also use a lot of estimates and forward thinking in managerial. So we have financial accounting, which is rules-based, external users based on the whole company. Managerial accounting, the part, future-oriented decision making. So in this class, we are back in financial accounting. A lot of times, by the way, people say, which one's harder? I would say for the most people, financial accounting tends to be a little bit harder, but you can have individual preference, which changes that. Managerial accounting is, I personally like both of them. I couldn't pick my favorite. Do you have a favorite? No. I'm asking Brian if he has a favorite. Yeah. Brian just said he likes both of them. He likes financial, but it is harder. If you're an accounting major and you make it through financial and managerial, your class in the fall of your junior year is Corp 1. It's intermediate accounting. And that's a financial class. That class is not particularly difficult as it's a marathon more. It's a lot of work. So anyways, so I'm going to go forward. Managerial sounds more fun. Oh no, this class is going to be a lot of fun. I didn't mean to mislead you. Yeah. Okay. So now again, I've got to do some lecture today because you haven't watched most of you have not watched the video lecture. So I'm going to buzz through some things, and remember, you'll see this again, and normally I will not be repeating video lectures. It's just because this is the first week. We have several forms of business, a proprietorship, and again, all this is in your book. See the details in your book. It's on pages 5 and 6. It's also in the video lecture. So if you're scrambling to write everything down, you're going to see it again. But anyways, forms of business. A sole proprietor. A sole proprietor is one person. He or she owns the business and runs it, and he or she can make all the decisions. The advantage to a sole proprietor is you do whatever you want, okay, within legal boundaries. The disadvantage to a sole proprietor is your personal assets are always at risk. Okay, you cannot. So if someone sues you, they can come after your personal assets. Then we have partnership. A partnership is two or more people who have gotten together, and they're running the business, and they can do whatever they want, subject to their partners agreeing to do it. And partnerships also have liability. So if the partnership gets sued, each partner is personally liable. So your personal assets are at risk. So we have proprietorship, partnership, and then we get into, I just have limited liability company here. That's, we also have limited liability partnership, and we're not going to dwell on the difference between those two. But if we have a company that's an LLC or an LLP, those operate like a partnership, kind of, but they limit the liabilities. It's actually a legal document that says your personal assets aren't at risk. And so that's real appealing. And people make choices on business based on how they want to run it. And then there's a lot of tax ramifications about which of these, but that's beyond our scope. This is not a tax class. And then corporations have the ability to issue stock, so they can be owned by many people. And an advantage to a corporation is if someone holding the stock wants to get out, it doesn't dissolve. A partnership, if you have a partnership of two people and one person decides to leave, the partnership ends legally. Okay, so you have to form a new partnership. Corporations have ease of ownership transfer. You can sell stock and the corporation still exists. Corporations actually have their own legal identity. They are recognized as a person by the, and I just have to tell you this funny story. So a corporation has this legal identity. It's kind of weird to think about this, which is on paper only, has a legal personhood. Okay, so there was a person out in California who this really bothered, and this has been a law for many, many years. So he was really bothered by the idea that a piece of paper could be a person. He just thought this was a travesty of justice. And this was just last year. So for years, he drove, you know how in the cities in California, there's a commuter lane that you can go faster if you have two people in the car. So for years, he drove with the corporation's articles of incorporation on the seat next to him, okay? So he would drive to work, and he had the incorporation papers right next to him. And he kept trying for years to get pulled over because he finally got pulled over last year, and this is why this became news, and he said they were going to ticket him for driving in the commuter lane with only one person. And he goes, oh, but I have another person. It's my corporation, okay? So then he went to court because the police officer's like, forget it, you're getting the ticket, you know. And so went to court because he wanted this to come out. And I think it's going up to Supreme Court right now. He has lost so far that a corporation can't be the second person in your car. So there's a limit to. So I just thought it was interesting that someone do that. What? Yeah. He should not get the ticket? Okay, let's vote. How many of you think he should get the ticket? This is interesting. Oh, yeah, yeah, why don't you do an online poll? What do you think? Should he get a ticket? Yeah. Did you do a poll? Okay, want to publish it? Anybody else? Okay, yeah, can you publish it so we can all see it? Okay. Wait, they can't hear you. Well, I guess they can hear you in the room. Okay, if you're online, don't use the chat room. Use the little, can we switch back to, let me switch back to the, so your vote counts. Okay, use the little window there to vote, okay? Okay. Okay, so our quick little straw poll. Yes, he should get the ticket. No, he should not get the ticket. Is winning right now? Okay. Yeah. Yes is losing. Okay. Okay. Okay, so there's just an aside about the personhood of corporations. So, okay, and just some examples. I guess the Arctic squirrel went out of business. See that picture. These are some examples of sole proprietorships in Kent. The Arctic squirrel was a sole proprietorship. It has since gone under. And Acorn Alley itself, the corporation or the organization that owns the area and does a lot of the rentals, that's proprietorship. Partnerships are hard to find. A plain vanilla partnership is hard to find in the area. By the way, if you go to the state of Ohio and you do, if you Google businesses or business filings, you can search what businesses meet different structures. So I couldn't find any bona fide partnerships in Kent. So there's partnerships across the state. There's a children's resale. Partnerships are kind of hard because if you just form a partnership with someone, you have to really trust that person, because if they go off the deep, your personal assets are at risk. You know, so that's kind of scary. You also can't transfer ownership very easily with a partnership. Okay, limited liability corporation, limited liability company, Kent Stage LLC. Okay, so they've got limited liability. The owners cannot be personally sued. Okay, go ahead. Off the Wagon, the toy store, that really neat toy store in Acorn Alley, that is an LLC. Dr. Greenbee is an LLC. Franklin Square Deli, awesome place to eat. That is a corporation, actually. So And Standing Rock Jewelers is also a corporation. It's fascinating what you can do with state of Ohio databases. So it's all public information. And Campus Book and Supply is also a corporation. I think that's the end of my sample. Okay, so what we're going to do now is we're going to do the first homework problem. Okay, now we're going to work through it. And like I said, I guarantee this week is our easiest homework ever. Okay, so this week I don't think we have any numbers actually. And this is all just answering. So here's a hint too. On these ones that, most of the ones that are not numbers, they're going to be the same each time. So when you're working on them, if you get one wrong, you finish the problem, hit the similar exercise button, and it's going to bring up essentially this. But that's this week. And know that don't get lulled into this false sense of security. It's going to get harder, okay? But for this week, nice, easy stuff. So this is the first one, asking us, two people are, somebody's looking for financing and looking for different types of organization. How should she organize? So the first question, and we're going to click one, is what forms of organization will enable the owners of this business to limit their risk of loss to the amounts they have invested in the business. So we have choices. This one should be pretty straightforward. Sole proprietorship, partnership, or LLP, LLC, incorporation. So those are our three choices. And the big question, question A, what if we want to limit our risk? Which forms, and I guess you can tell it by forms, plural, okay? Go ahead and display answers because we're going to move this one. What is it? Has to be C, yes, because it's the only one that's plural. So that's nice when you're watching for questions and it gives itself away. Okay, so it is, but how do we get 3 B's? Okay, so this one is C. It is LLP, LLC, corporation. All those forms allow us to limit our risk. Okay, so those are the ones. If we want to limit our risk, and we limit our risk to only what we have invested in the business, they cannot come after us personally. Our number one priority, we're going to pick one of those forms of business in C. Okay, so we have C. Okay, so let's move on to the next one. Yeah, oh yeah, okay. Okay, so B, what form of business organization will give her the most freedom to do the business as she wishes? So we can click in one. This one should be pretty straightforward too. Okay, let's go with the answer. And the answer is A, and hopefully we online. Yep, okay, great. Okay, so then we move on to the third one, and the third one's more of a thinking question. Okay, what form of organization will give creditors the maximum protection in the event that the company fails and cannot pay its debt? So now we're looking at from the standpoint of the creditor. Okay, now I don't want to reveal the answer yet, okay? But let me emphasize something. I'm a creditor. That means I have loaned money to this business, okay? And let's say the business goes under, okay? So the business goes under. When we're talking about the maximum amount of protection, meaning where what can I get as a creditor? So as a creditor, everything I see right now, but as a creditor, if I have a whole bunch of shareholders, can I sue those shareholders? No. So let me give you a hint. The answer is not C. So let's keep going here. Okay. Why B? Why B? Anybody can explain why B? Yeah, and there's more than one. Okay, great, 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 great. Go ahead and show the answer. Okay, the answer is indeed B, and the reason it's B is because we know it has to be A or B, because I already told you C was off. So we want to be able to sue people. This is as a creditor. And the reason it's going to be a partnership is with a sole proprietor, how many people can you sue? One sole proprietor, right? That means one person. Partnership, you can sue all the partners. So that's going to be the maximum protection in terms from a creditor standpoint. So that's an example of just kind of watching carefully what's being asked there. And that one, typically, most people get it wrong the first time through, but now you won't on your homework, and you'll know why. Okay, next one. Next one. Oh. Okay. Did we just skip to the answer? That was nice. Okay, let's go to the answer slide now. Okay, go ahead, go. Okay, so in which form of business, so this is a question we would have done, in which form of business ownership are the owners of the business legally distinct from the business? And that would be corporation. And when we talk about legally distinct, we are talking about that they can't be personally sued. Okay, so if I own stock in a corporation, I cannot be sued for that corporation. Whereas partnership and proprietorship, the owner's legal identity is intertwined with their business identity. Okay, now onto a little more lecture. And again, you're going to see this in the video lecture. It's also in your book on pages 8 and 9. There's certain assumptions that we make when we're doing accounting. So we're laying the framework for what we do the rest of the semester. We have an entity assumption, a continuity assumption, historical cost principle, and stable monetary unit assumption. And again, this is pages 8 and 9 in your book. So and don't worry about writing every single thing down. Again, you also have the recording available every day if you miss something. But we are going by the book. So we are on pages 8 and 9. So now I'm going to talk about each one of these. The entity assumption. Now, the entity assumption feels like it's confusing legal identity. The entity assumption says that in accounting, a person is separate from the business regardless of that legal form of business. So just because you're a sole proprietor, doesn't mean that your business records get mixed with your personal records. They are still distinct. So from an accounting standpoint, we're not worrying about the legal distinction between a corporation as a person or not. We have, from an accounting standpoint, each entity is distinct. So this is Carl, who owns Franklin Square Deli. So Carl has personal records, and Franklin Square Deli has has its own set of books. So we've got Carl the person on one hand, and we have Franklin Square Deli on the other hand. And those are two separate entities from an accounting standpoint. We do not intermingle Carl's personal stuff with his business, regardless of what kind of business he has. We already said that Franklin Square Deli is a corporation, and that's fine. It could be a sole proprietorship, and we're still going to say this. From an accounting standpoint, we have Carl's an entity, the business is an entity, and those accounting things don't mix. Okay, the next assumption we have is the continuity assumption. This is that when we do accounting for a business, we're making the assumption that it's a going concern. A going concern means that we don't anticipate it going out of business anytime soon. So for example, Borders went out of business last year. The accounting for Borders, and you could see that coming down the pike for Borders. They filed for bankruptcy protection. There were reports that they were unable to work out a reorganization plan. They couldn't find a buyer, so they were going down the tubes fast. Their accounting would no longer follow U.S. GAAP rules. Their accounting would follow bankruptcy rules, which are very different, because we make the assumption in normal accounting that this business is going to be ongoing, so it has value to its trademark. It can use certain assumptions for its buildings. But if you say this business is going under tomorrow, in the near future, all those rules change. So we have to have this assumption that the business is a going concern. Apple would be a going concern. Okay, it's going to continue into the foreseeable future. Whereas a company that's not just facing bankruptcy or looks like it's on the brink of disaster, that's a whole different story in terms of accounting. We have the going concern or continuity assumption. Okay, historical principle. Okay, this is Scribbles. Okay, so down in downtown Kent, Scribbles coffee shop. We have this principle that we record things, most things, at historical cost. So what I've got here, this parcel record, the screenshot of a parcel, that's when the owners of Scribbles bought the building. Okay, so this is the purchase record that's publicly available online, and the address is 237 North Water, and it lists the transactions. So the most recent transaction on September 24th, 2003, this building was purchased for $145,000. Okay, so the owner of Scribbles purchased the building for $145,000. That's what it's going on the owner's books at, the business books at, $145,000. That's its historical cost. Now, due to all the revitalization of Kent, say that building's worth $250,000. We do not change the value on the book. It stays at the historical cost. So things stay at the historical cost. We do have some exceptions in future chapters we'll talk about, but a building is going to be under U.S. GAAP. A building is going to be recorded at its historical cost, and it's going to stay at its historical cost. You would have to go to, there's a question about where can we find information about any building. Each county has a database. I think they're all online now due to public records laws, but you can search the county recorder's office, Portage County auditor site for Portage County. You'd have to go to the county that the building's in, and you can search real estate records, and there's a lot of information on board for that. Okay, and then we have stable monetary unit assumption. It really doesn't affect us too much. When we assume that the monetary unit we are using is stable, meaning there's not hyperinflation. We recognize there's a little bit of inflation every year in most cases, but unless inflation is hyperinflation like 200% or something, we just make the assumption that our monetary unit is stable. So what this means is that we don't at the end of the year go, oh, due to inflation, prices raised 3%, so let's go back and adjust things. We keep it stable. We do not adjust. But again, if we're in an economy, some of the South American economies have experienced hyperinflation, they would have a different set of rules because of huge amounts of inflation they have. Okay, so now we have another homework problem. S1-5, and what we have to do is we have to identify, we've got 3 choices. I made it easy. There's 3 choices for these of the 4 that we just talked about. 3 choices. We have entity assumption, historical cost assumption, historical cost principle, or stable monetary assumption. So we have these 4 situations, and we have to tell which assumption or principle is in play here, either being violated or being followed, it doesn't matter, or which will provide guidance. So first situation, A, Wendy's, the restaurant, sold a store location to Burger King. How can you determine the sale price of the store? By professional appraisal, Wendy's cost, or the amount actually received from the sale. So they're basically saying, what is Wendy's going to record this sale at, and what guides that? This should be fairly straightforward, I would think. Okay, why don't we go to the next slide? No, I guess, sorry, yeah, okay. So we'll publish the poll, and the answer in this case is historical cost principle. It's B. Okay, so the answer is B. There you go. Okay, so the answer was B. Okay, now on to the next one. Inflation has been around 5.5% for some time. They're considering measuring their land values in inflation-adjusted amounts. So what is at play here, or should be governing here? Okay, the answer is C, stable monetary. You want to publish the poll, see how we did? Vast majority chose C, great, so it is stable monetary assumption. So what they're actually considering doing in B is a violation of stable monetary assumption, but that's what should be governing the situation. Okay, now third one down, General Motors wants to determine which division of the company, Chevrolet, is more profitable. So what assumption are they using here? And this one's kind of varied. You kind of have to get through. And how I do this one, I'll start at the bottom. Stable monetary assumption really doesn't have anything to do with that. Historical cost principle of stuff they bought, that doesn't really have anything to do with it. So by default, it's going to be A. The answer is A. And the entity assumption, because they're treating Chevrolet as an entity, they're treating GMC as an entity, so each division is its own entity, and it's not all just lumped together. We have in financial accounting pretty big entities, but in this case, those are pretty big themselves. Okay, and then D, an especially good buy on a computer, paying only $500 when it normally costs $1,200. What governs your accounting value for this computer? And I think we can just go straight to this one. Brian, you're on the spot. Go ahead. Yeah. His cost principle. Yeah. Yeah. Okay. So, so historical cost principle governs it. We're going to record this computer at $500. It doesn't matter what it's worth. We are going to value it at what we paid for it. Okay, so that's S15. So then next up, oh, I did it myself. Okay. Okay, now this one, so a question or yes, no in Collaborate land. Okay, the business records of a sole proprietorship should include the proprietor's personal finances. True or false? Go ahead to the, and then we go. Okay, the answer here is false. And the reason it's false, so good, 50 or 37 answered false, but 16 answered true. So we're going to talk about why this is false. Okay, from the entity assumption, we assume that the person is one entity and the business is another entity. It doesn't matter the legal form of ownership. It doesn't matter from the law standpoint. They are separate from an accounting standpoint. You're going to have to do this for they're different, but they're two different things. So when we do transactions in here, we're going to be treating a personal owner separate from the business. And I'd say almost all the we're looking at it from the business standpoint, not the personal standpoint. Okay, now a longer question. This takes a little bit more time to read. Historical cost is A, for each asset on a yearly basis. B is equal to the amount of cash paid less the dollar of all non-cash consideration given in the exchange. C is a verifiable measure that's relatively free from bias. Or D is the amount to sell the asset for. Okay, let's go to the answer slide, Brian, and then publish it. Okay, historical cost. The reason the historical cost is so attractive is we can verify it. So we can look at the invoice, and it's free from bias. We're not making it up. This is what we actually paid for it. So all the other answers are wrong. Historical cost, we can verify it. We can verify it. It doesn't have, it's relatively free from bias, meaning we can't manipulate it easily. Yeah. One more question, and then we have another homework problem coming up. Okay. The CEO of ABC Company owns a vacation home in Hawaii, and ABC owns a factory in Detroit. Okay, so we have the CEO has a vacation home in Hawaii. We have the company has a factory in Detroit. Which of the properties is an asset or assets of the business? Is it only the vacation home in Hawaii? Be only the factory in Detroit? Both of them, either of them. So from the business standpoint, which is an asset, which are, which is. Let's go to the answer slide and then, okay, the asset of the business is only the factory in Detroit. That vacation home is the owner's personal asset. So we're going to have only the factory in Detroit. Okay, now I'm going to do this really briefly, and then we're going to use the exercise to talk about these different things. I'm just going to put this in. So we have to talk about assets, liabilities, and our business. And I think the best way to understand that is think about it on a personal basis. So this is me. So let's talk about what I own. Can you switch over this? Okay, so let's make the assumption I have a house for $100,000, a car for $5,000, and $1,000 of cash. Those are assets. They're things to me that have value, that have future economic worth. I can drive the car, so it provides me value. I can live in the house. I've got cash. I can buy things. So those are all assets. Then, so my assets, if I add all of that up, all those things up, I have $106,000 of assets. So next then, let's talk about liabilities. So assume I have a mortgage on my house for $60,000 and a car loan for $3,000. So what we would say then is I have total, that's liabilities. Liabilities are debts. It's things I owe. So my liabilities total $63,000. Okay? So we've got what I own and what I owe. And that's a common thing to think about, then what comes next? If I know my house was, all my assets were $106,000, my liabilities are $63,000, let's go on. Okay? So if I take what I own, subtract what I owe, then that gives me my net worth, right? So that's pretty standard. We think about, well, I own $1,000 worth of stuff. I owe $63,000. So my net worth is $43,000. That's all that is. So, and this should be pretty familiar. People talk about their net worth. That's what they're talking about, roughly, approximately, what they're talking about. Now we can apply business too. We just have one different term as we talk. Business terms. What's owned? Assets. Does it have future economic value? That is an asset. What is owed? Liability. Do we have a legal obligation to pay something in the future? That's a liability. The difference between the two, what we refer to on a personal basis as our net worth, is referred to as equity in business. Now, equity for a business can be referred to as owner's equity, stockholders' equity, shareholders' equity, but it has the word equity in it. So many times I'm just going to abbreviate as equity. By the way, a sole proprietor has owner's equity. A corporation has shareholders' equity or stockholders' equity. So, but we don't need to get too detailed at this point. That's not important. I was just telling you why there's different terms. Equity is the big major concept here. So liabilities and equity. So what do we do with those? So the accounting equation. The accounting equation is what so many things in this class are based on. You absolutely need the accounting equation. For a person, not for this class, but for a person, my accounting equation is going to be, gee, my assets come from one of two places, right? Either I financed them or they're my net worth. Okay, so my assets equal my liabilities plus my equity. We saw this in this case. I have assets of $106,000 has to equal my liabilities plus my equity. Wait. You're going faster than I am. Okay. No, I know. I was like, this is theatrical. Yes. Okay. So let's go back one, please. Okay. So from a person standpoint, I have my accounting equation, assets equal liabilities plus net worth. Okay. So that's the person thing. And we know where those numbers came from. So now next slide. From an accounting standpoint, the accounting equation is assets equal liabilities plus equity. Now, I can rearrange that however I want. I could say assets minus liabilities equal equity. This is where a little bit of algebra creeps in. I should be able to solve for any unknown term in that equation. But that assets, liabilities plus equity, absolutely have to know it. That's going to be what everything else is built on in here. We need that equation over and over and over. Okay, so let's do a little question on that we just looked at, the accounting equation. We know what the accounting equation is. So the owner's equity of any business, how can you calculate it? A, revenues minus expenses. B, assets minus liabilities. C, assets plus liabilities. Or D, paid-in capital plus assets. Okay, let's go ahead and put the answer slide up and publish it. Okay, so the owner's equity of any business is its assets minus expenses. Okay, so good. So we'll be manipulating. I could ask you what the liabilities have to be the assets minus the equity. So we'll practice a lot on that next week as well. So next. Okay, another exercise. Okay, now on this exercise, you've got a whole bunch of different accounts, and we haven't talked about all these accounts yet. Okay, so on this we've got a whole bunch of accounts, and we have to identify whether that type of account is an asset, a liability, or stockholders' equity. So what I'm going to do next on the next slide is I'm actually putting answers so we can talk about them. So I'm going to put up the answers, I'm going to let you write them down, and then I'm going to talk about them, okay? So there's some of them I'm going to talk about, not all of them. So I'm going to go silent while I give you time to write. Okay, I'm going to make some comments about some of these. Okay, accounts payable, and we are going to talk about these at length. My main concern right now is you being able to answer the homework problem. Accounts payable is a liability. Accounts payable, like our business goes out and buys 20 reams of paper from Office Max. And says, we'll pay you later. That's an accounts payable. It's debts that we incur in doing business where we say, we'll pay you later. Common stock is what a company issues. When you see the account common stock, a company has issued its own stock. So that's an equity account, stockholders' equity. Supplies, we go out and buy, we're Starbucks, and we go out and we bring in 20,000 cups, and they're in our back room. Those 20,000 cups are an asset. They're supplies. We aren't going to use them today. They're going to be used up over the next month or two. So that is an asset. Retained earnings is something we'll talk about next week. That is part of equity. Stock and retained earnings. It's a running total of all our earnings to date. Land, pretty clearly an asset. We own land. Prepaid expenses. When I get my insurance from Progressive, if I pay in a year, I get a big discount a year in advance. So I pay in November for my year. In November, then, I have a prepaid insurance account. That's an asset. It has future economic value to me. It provides me insurance coverage for every month for the next 12 months. So that's G, accounts receivable. We sell something to a customer, and they say, we'll pay you later. That promise to pay from our customer is an asset. Long-term debt, this is like a mortgage the business would have. Liability. Merchandise inventory is stuff we're going to sell, so that's an asset. Notes payable, a bank loan we signed, we said we'll pay you later. That's something we owe, so it's a liability. Accrued expenses payable, this is what we're saying we owe. We just haven't gotten the bill yet, so that's a liability. And then equipment is an asset. Now, all of those accounts we're going to see in detail, especially over the next 2 weeks after this. So now that you have the answers, homework, and we're going to be talking more about that. So now we have another question. Okay, examples of liabilities. So based on what we just did, pick out the liability answer here. A, accounts payable and accounts receivable. B, accounts payable in land. C, investments and owner's equity. D, accounts payable and long-term debt. Okay, let's put up the answer and publish a poll. The answer is D. And the reason it's D is accounts payable is a liability, and so is long-term debt. Going back through those accounts with A, accounts receivable is an asset. With B, land is an asset. C, neither of those is a liability. So that's it on that. The next slide. Okay, what's due? So, do not wait until Saturday night. If you do not get your homework done Saturday night, for whatever reason, that's the one you drop. We have homework chapter 1, part 1 due Saturday night. We have course intro quiz 1 and attendance quiz 2. Those are both due Saturday. Attendance quiz 2 will be available approximately 5 p.m. today, Wednesday. Sunday, video quiz 2. And do not hesitate to ask questions. I can help you if you just let me know you have questions. Yes. The attendance quiz. It's not available yet. The homework, the course, everything else on there right now except the attendance quiz. Attendance quizzes always show up at 5 o'clock on Wednesday.